Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
4th of July, brothers.
Boy.
Fellow Americans, my fellow Americans. We did it. We did it.
Survived the 4th of July.
That's right.
Marked safe.
Well, you talked about movies last week, I think on the last show, July 4th movies. Were there any that you looked at?
This weekend to me was a complete blur, to be honest. We watched some Andy Griffith show.
That's patriotic.
Yeah, for sure. Now let me just go on a little side tangent here, because I grew up on Andy Griffith, as we all did, I imagine.
Oh, absolutely.
You know, it's the best, maybe one of the greatest shows of all time. But here's the thing I'm going to say. I was telling
Shout out to Mount Ear. Is it Mount Ear, North Carolina? Shout out.
I think so. Yep, okay. That's right. Shout out. I think one of the craziest things to me is if you watch, I told my wife I was going crazy. If you watch the first season of the Andy Griffith show, it's like a parallel timeline to the rest of the show. Andy Griffith is he's villainous. Now he's not like a really villain, but he is mischievous in a way that the later seasons is not. Barney is more innocent. Like he's same characteristics, but Barney's much more innocent. And there's this female who works at the drugstore that Andy's into, and they are like constantly fighting. And I don't remember any of that growing up that season.
No.
It's like they whitewashed it. It's so interesting to me.
And that was the whole first year episode?
Yeah, basically at least the first couple episodes that so far, that's what it is.
Interesting.
It was wrecking my brain a little bit. Watch Back to the Future definitely does count. Back to the Future is one of the most patriotic movies of all time. And
referenced frequently by options traders who wish they could acquire a DeLorean, because all you need is a one-day knowledge of the markets in a DeLorean, and changes everything, right?
I also want to shout out that I think a Cybertruck is basically a DeLorean.
Yes, it does. There's definitely some.
I mean, it's now. Does it have a flux capacitor? Who knows? But so yeah, we survived the market. We survived the fireworks. I was telling the boys, living in the country in Knoxville, Tennessee, some of my neighbors, I think, still think that they were fighting the revolution. I mean, there were cannon fire. We had gunfire. We had, fireworks that no doubt cost $10,000. That
easy. Oh, yeah.
Paid for with like American Express.
I think everybody has to once in their lifetime go into one of those fireworks stores. And as I said, it's as big as a Kroger, some of those grocery store. And it's so addicting because when you go in there, it's like a kid in a candy store. And their salesman walks around with this little iPad, and he's like, because you're looking at these things that, go up in the air and do all those nice things at like different events. And he'll bring it up a 1-minute video. And then, your response is going to be, wow. He's like, well, do you want one? Absolutely. And then,
Sure.
10 minutes later, how much is it? It's like $400 for something that goes up for 15 seconds. But it's a fascinating, it's almost, guys and guns might be a little bit more than, but next to guys and their guns would be guys and firecrackers.
And go ahead, Troy.
No, go ahead.
I was just going to say, and there's a very, very small sub-tier drop-down menu of guys with their cannons. I heard you mention a cannon. There is also a cannon in our neck of the woods.
Really?
Yes, there is somebody who fires a cannon.
Wow.
I haven't located this person, but it's talked about in the neighborhood. And when the Pacers were making their run, it was going off all the time during one game. And somebody's like, oh, he's shooting the cannon every time the Pacers hit a 3-pointer.
That's a neighbor who's going to get a lot of respect.
You got it's been going on for a long time.
Two things with that before I forget. Apparently NBA 2K 26. There's a trailer for it now, I think, where they have Haliburton sitting at all the WNBA versions of the games because you can play as WNBA in 2K.
In a booth.
Wow.
Yeah, and Haliburton's just sitting on the sideline for all the Fever game, which is pretty realistic. I think that's the most realistic part of the game.
It's like the most marketable part.
Right. Two, this is so I had some neighbors come over and we sat on the porch, and it was their first time in the area. I said, have you guys been here for any 4th of July stuff previously? And they said, no, that's our first year. Came from downtown. And basically we sat there, and it starts out like in the background, you hear the stuff like, you hear the little whiny ones. And then just as the night progresses, our neighbors like to really peak around 1 o'clock in the morning.
Yeah.
So they just, but by the end of it, we can't hear each other talking. It's so loud. And my next door neighbor, shout out if they're watching the show. I don't think they are. Our neighbor, closest neighbor, they don't smoke cigars. They smoke some other stuff. If that makes sense. I'll leave it at that. But
okay.
But you hear the cannon in the background. You hear the rockets, red flare. The bombs were bursting in air, and then you hear the slow, distinctive sound of a 30-06. And then you hear the slow, distinctive
percussive
sound,
noise.
Yeah, of like a 9mm, just and it's like, this is very close. Not like, oh, that's cool. Like very close to where my porch is. It was very good.
The sounds of Tennessee.
My. So,
and they were, I'm guessing they were not properly discharging into a berm or recommended culvert or hill or mountain.
They were, I think, in their mind, properly discharging into a British soldier.
Okay, which was in the air.
In the air.
Straight up. Which
Matt, they didn't read the rule book. They didn't read the rule book ahead of time.
That's right.
Right.
And so, yeah, all of our dogs, it's the 1 year where basically they get to decide, they have to live like they're in Vietnam. They're like participating in Forrest Gump.
Yeah.
So anywho, but we're back. I'm so sick of short weeks. And
it's been a couple.
I'm ready just to trade, I'm ready to automate, and I'm ready to have the automation open things.
How's the market doing?
Great
down
question.
19 futures are down 20, about
down
19.
Crashing. So I had a friend who's automating just text me, said, hey, are we open for business this week? I said, we're open for business. Turn them things on. So, all right. So guys, listen, this is what we're doing. We ended last week saying we want to try to continue to put something on that reduces risk, but also doesn't flag PDT. And I'm going to introduce something. A couple caveats. This is my favorite. Troy Caveat McNeil.
Yeah.
That's what they called me. So I've heard people say when they're looking at these tests, they say, hey, one contract is really bad. Don't cap it to one contract. I just want to go ahead and put this out there again. We agree. When you're testing things, definitely test it with uncapped contracts, use different percentages, test. That's part of the test process. 2, surely you guys aren't just taking these tests and trading them, right? Surely you're doing your own research and in trading, right? Anyway, that's my 2 caveats.
Sure.
Yes.
Sure.
Yeah. Hopefully. Well, I mean, here's the thing. There's like a billion, a trillion, a gazillion places. Their whole business is copy trading. That's not option omega. Like these are tools and you can use the tools. This isn't copy trading. So if you want those things, go find those things. They're out there. Right.
Well, I mean, they're wonderful that most of the shows, Troy's automating another trade, and it gives you a good template. I mean, it's helpful to me. You got a nice template from where to work at, to what to build on. And but the thing is also, whatever the strategy is, challenge yourself to understand thoroughly the Greeks and everything of what you're doing. If it's a 0 day or a 3 day or a 15 day, how are the Greeks? Make sure you know what you're understanding. I mean, to me, to trade something and not even know what the graph might look like, right? Or I just think it's, I mean, could you do it? Yes. But it can get a little bit irresponsible, because then the problem is you're setting yourself up when you lose money. You have no stinking idea why you lost money, right? And so you're not going to recover. You're not going to be able to maybe, okay, is it just something unusual happened in the market? I mean, like when you look at the last 2 weeks or week or two, right? Week and a half, you've had this over 2 standard deviation move, whatever period, if you want to use 7 days, 10 days, 12 days, over 2 standard deviation moves, you've had a decrease in volatility. And again, because it's over 2 standard deviation move, it's not happening every week. So if you don't have that perspective and see, okay, this is actually what happened, right? It's always got to be price and volatility. And how does that affect the double calendar? How does that affect, obviously, if you put credit spread on, you're in great shape, right? It doesn't, the low vol didn't bother you because you got the direction right. But if, depending on the strategy you had, whether it be a butterfly, calendar, iron condor, and it's just, that's the key. I mean, if you can find out why you lost money, then it's workable. And then you see, is it workable? Okay, we moved 2.5 standard deviations. It probably won't move 2.5 standard deviations every week. No problem. Leave it alone. But I think that's the thing, when you just understand the back test without understanding, if you can't visualize what the heck this looks like, know it inside and out. And that's kind of the challenge. Anyways, it's the early morning, Monday morning rant.
I love it. And third caveat, and now I introduce the test. I probably will not, no matter what we do with this trade by the end of the week, I probably won't put it on because it's not my thing. And that's part of the thing with
the credit spread stuff.
Learning your stuff is, this thing is not my thing. I also know I'm in the minority. This is like a lot of people's thing. So take with it what you will. But I'm going to introduce it. I feel like I had a really powerful third point beyond that, but if I can remember it, I'll tell you. Here's my third point. To the one contract thing.
Yeah.
Totally agree that you should test with multiple allocations. But here's the thing. If you truly have $5,000 in your trading account, again, that's just a starting point. If you truly have that, you shouldn't get anywhere near 2 contracts a trade for a long time.
On the SPX.
Matt,
you're just saying anything.
I would argue
that's because learning, one contract is made for learning.
Well, also, right. But like one contract that literally is about your sizing
right.
for a $5,000 account.
Yeah.
You can lose $5,000 really fast with one contract, depending on how.
Yeah, depending on what you're trading. Yeah, for sure. Well, for sure you can. Yes.
So, anyway, those are my caveats. I stand by them, and so here we go. With this being said, I give you something I call a fragile 1DET condor, and let me throw out all the bad stuff, and then we'll talk about the good stuff. Okay? Here's all the bad stuff.
Yeah, hit it.
Well, actually, we'll talk about what it is first, then do the bad stuff. What is this? This is when you have a move up of 0.25%, and we're in a VIX environment like now, we're going to allocate 15%. So shout out people who didn't like the one contract. I don't have one contract on here, right? And so you are selling a 35 delta put spread 10 wide and a 40 delta call spread 10 wide, making it a Condor. You're opening it at 244, and you exit. You got 3 exit criteria. This is a 1 day because we don't want to play PDT. So pattern day trader, for those who don't know that. So you're going to get out at either a 50% profit target, you're going to get out at a stop loss of 80%, or you're going to exit the trade at 2:30, day of expiration the next day. Okay, so it's a pretty simple Condor with some added rails on it. Now here's I'm going to give you the bad, and then we'll talk about the good. First off, shout out Navigation Trading. Shout out, I believe Tim Weiss. Never interacted with him, but people really enjoy his stuff. I don't know who came up with it over there, but there's a concept at Navigation that they've traded. I don't know if they're still trading it, but you can look it up over there. I want to have Steve from Navigation on soon, because very kind person who does a great job, and like Sheridan, I learned a lot from. But they have a concept called the Wooga trade. Now Matt knows the lingo. Matt has his eye on every alley.
I really don't.
Education.
This is false. I know some things.
Do you know anything about the Wooga?
I think it's a power hour trade that I thought it was either a ride or I can't remember. It's a power. I think the concept is it's a power hour trade. It's a short iron condor, a traditional iron condor, and it is a better risk reward than a lot of the condors out there. That's going off memory. That's how I would say it. So like this,
this is not Wooga. What I wanted to say is I do want to acknowledge where we get things from. A lot of that exit criteria is based off of a Wooga trade that I have saved. But it's not 0 day. It's a very different trade, because once you're changing expirations, it's a very different trade.
And again, the idea of making this a 1 DTE is it really changes the entire framework concept of the trade, because what you're doing with this is you're entering in power hour and then exiting before the next power hour, no matter what, either profited out, a stop loss, or a timed exit. So you're avoiding the opening closing on the same day, which was the point of the trade.
Yeah. And power hour, for those who don't know, is the last hour of the trading day. So 3 to 4.
Yeah. I would have thought a little bit better. I'm looking at the first in the trade log, Wednesday, July 2nd. And this is a 10 wide. I'd almost consider this, yes, it's an iron condor, but because it's a little bit higher delta than maybe I'm used to looking at, I may say, you can call it a split strike butterfly. You could throw it into that family if you wanted to. But I would have thought, even with it is low vol, so you're getting less credit.
Yeah.
So it's got about a $2.30 credit. So your margin is going to be about, what is that? About 700 in the near sevens. What's 1,000 minus 230? 270. That's 770. Is that right?
Yeah. Now remember, we have 3 contracts on this, though. So
I'm sorry. Oh yeah, 7. But per unit, your margin's going to be about 770. As you start getting 30, 40 deltas, maybe a little bit higher, then you're getting that kind of that good risk reward, right? Kind of the tasty trade, that 1-to-1 risk reward. You're giving up probabilities for that. So I like this. With that, it's a pretty good win percentage. When you look at the deltas and stuff, and
I'm gonna, for the sake of just clarity on it, I'm gonna run it with 100. So on this case, you're risking. It's almost, in this loss here, the last 30, it's a 1-to-1. Risk reward. If you run it back, let's get some more losses and see.
I'd love to keep. This is super interesting. There's some interesting concepts here.
So you're keeping it because you're exiting.
I'm sorry. Yeah, I'm thinking everything's SPX to me, and so I'm thinking a 10 wide. No.
Oh yeah. This is.
I'm sorry. My mind is
I also
sorry. Yeah.
The cues will get you, but
this is only 3 wide. Okay, I'm sorry. Yeah.
So
totally different. Sorry.
Well, and the reason is because the caps, it's not uncapped, so it's going to open it and try to do that, and you could test different, which one gets better. You'll take less trades if you do this here, but it might be a lot better because you're choosing your strikes, discriminately with this stuff. But I want to talk about, you just open less. You just open less when you do that. So,
so that's year to date.
That's year to date. Yeah, year to date. So I want to go and I want to talk about what I like about this trade and what I don't like about this trade.
Yeah.
So here, let me do what I like about it. I want to be positive. People tell me I need to be more positive, and I'm like, well, that's the stupidest thing I've ever heard in my life. So
I'm positive. You don't need to be more positive.
Yeah, I'm positive. That's stupid. So a couple things. First off, I like the idea. I mean, it's my dream really with credit selling is to find a shorter dated thetas on your side, but you just don't get gammaed to death like you do with 0-day stuff. Now, again, I'm speaking my own book. I know there's people like Mark Anderson crushes it with 0-day. Like there are people who kill it with 0-day. It's a temperament thing. It's a personality thing. It has nothing to do with the numbers or the metrics. It has to do with me is weak. Me is a weak boy. So I like the idea that it's 1 day out. I like the idea that it has some guardrails, that you're not losing the full percent. You're not always losing everything on it. I like that. Here's what I don't like about it. And these are kind of important things. And this is why I said I call it a fragile iron condor. You really shouldn't run this. I'm really being, this is really just an idea. And this is why. That opening time of 244, there's some fragility in that. And I'll let you guys test it. But it does not perform as well with minor changes to the minute.
Really? Is it magic? Does it have magic minute disease?
I do think it has a little magic minute disease. Okay. I'm going to be honest. So you could test it. There might be an even better minute. I didn't test all the minutes, obviously, but you could test it and run with it. And let me share it real quick, just so we can do that. Let me. This tool of ours here. Let's do that. Put it there. Put it in there. Put it in the show in Discord. That way people can see it there. All right. So that's one. Number two, there does seem to be a little bit in my mind of curve fitting going on in this trade. And I didn't mean for it to happen. It just kind of happened naturally. But if you make really any changes to this trade, it does diminish the MAR pretty substantially. So the challenge to the chat, to the show, is you guys have a bad or a really good habit, like bad in a cool sense, as the kids say, like a Michael Jackson 80s. You guys have the bad habit of taking tests and making them better. So I would encourage you to take this test and make it better before you even think about trading this. This feels fragile to me. Does that make sense to everybody?
Yeah, the magic minute thing is that's, I have found that I had 1 day stuff that I was trading at certain times. And Dana, I actually remember we spent a long time back testing one thing, and then we realized, man, if you change it just a minute in either direction, the capture rate goes down a ton, like a measurable amount. Yeah. And I've not played with this one at all, but that to me is super interesting. And that just goes towards robustness, the idea of robustness. And if you change something 1 minute, it's just a less robust idea, right? Like it just is.
And especially with automation, Dan, I mean, you've taught so many people through the years. You get this idea of saying, like, again, I have some friends now who are starting to automate. And because they're newer to options, they don't have as much trust in the system. Like when you're learning options, it makes total sense to me. You know, you're like, well, what makes this a good trade? It lost. And you're like, well, it loses. That's part of the plan. But Dan, I mean, if you find a trade that does only work at specific times, in my mind, as soon as that thing starts losing, you are going to give up on that thing almost immediately.
Yeah.
You just don't have any trust in it.
Yeah. This thing, I actually like it. I like it because it's a good risk. I mean, here's the thing. Obviously, the negative of this versus a 0 day is here you're coming in at the end of the day, right? And you got that overnight. And if I'm a 0 day person, I mean, sure, you could diversify. I get it. But if I'm a 0 day person, like, why would I want to? Now I'm taking the overnight risk. I'm coming. I get it. You're coming at 2:44 Eastern. So, you know, you're kind of not generally, you shouldn't get hurt much at the end of the day, right? Because you have another day there. But you got the overnight, right? Which is a big hurdle. The plus of it is I like the risk reward. I like the profit target, the risk reward. I like and because of that, you have a nice win percentage and everything. So there's pluses. It's just that I don't know how the 0 day people would feel. You know, that's a big thing to give up. Wouldn't you agree? For 0 day people to say, you want me to take the overnight risk.
Right. Well,
right?
it's a different trade.
Yeah. I think from a diversification, I would do it. And if I were a 0 day person, I'd say, you know what? I'm doing whatever the number is. Let's say $4 or $5 grand in the 0 day, or whatever, $2 grand in the 0 day. Would I easily do, 25% of that and something like this to get it going? Yeah. I mean, I think the more you diversify, and to me, that's the key, diversifying your price risk, putting them on different days, diversify your duration risk, diversify your, that's why you put long Vegas, short Vegas. I just think that's really, really important. And what you guys do, you call it the schedule, right? You schedule things different days and stuff. I think that's one of the key things. So I like the trade. It just, the only thing with this is, Matt or Troy, would you, because, okay, now you got the overnight risk, do you do some blackout dates where you say, okay, in the morning, before, think about, you've got earnings before the opening, or let's say you're doing this at the end of the day and NVIDIA has earnings after the close, that will affect the market in the morning. What about all these news that come out, BMO? Well, that's going to be now if there's the only thing I would probably consider would be if there's some big news thing coming out or something, maybe I want to pause that day, because this could go on daily, right? But then you're getting into, the
FOMCs and
do you want to mess with, FOMC comes later in the day. So I probably it wouldn't matter if I did this like on a Tuesday evening and FOMC comes in at the next day at 1 o'clock.
Well, a lot of times the vol won't burn off.
Yeah, but you'll generally you can still get some theta out of it, right?
Yeah.
So,
by 2:45, it exits at 2:30. 2:30 is, I think a lot of the theta will burn off between 2 and 2:30, because the trade used to be, a lot of people would put on a short condor.
Or on those days,
and then you put a long play at 2:30.
Or you have the thing, if, okay, this would be an exception. Let's say you're going into the Fed announcement and you're not up 50%. You're up 35%.
Sure.
Now, this would be for Matt. Matt, would you, now see, to me, if it was a Fed thing, I'm just looking for risk management. In a second, I'd take it off at 35% because I'm like, here's a catalyst, nothing can happen. At that point, I might just manually,
pull the ripcord,
get me out. And I think that's an individual. And I don't know if it, we'd have to look at the data on that. But anyways,
what's interesting to me, and this backtest is super interesting, Troy. There's a couple thoughts. I'll do a thought that is two thoughts. One that's maybe a little more surprising because I feel like it's actually less important than one that's more important. I'm a huge proponent of the Punisher, which is found in the miscellaneous options section, way of beating up your back tests. I want to talk about this Punisher because it doesn't have one thing that I always use, which is 2 hits at profit target. But I can actually kind of steelman both and strong. I can make both sides of the argument for this because the idea of 2 hits at profit target is to make sure there's not a moment of illiquidity. So on the Qs on a 0-day, what's primarily a 0-day Condor and a 1-day Condor, there you should be pretty liquid. Now I would still probably use it. So that's one thing. The other side of the Punisher is it has 30-cent stop loss slippage on the Qs on 1 DTE, which that seems pretty healthy. I've heard people talk about 1DT and they're like, oh, you can't just check stops at the minute on 1DT and so much can happen in the 1 minute on 1DT within a minute. And they're right. Like a lot can happen. That also is super contextual on what you're trading. If you're trading 1DTE stuff that's low delta, hello, you can get totally wrecked. If you're trading 1DT stuff that's higher delta, the risk profile changes. It just does. And 30-cent stop loss slippage is what I used to use on 1DT for SPX. So I feel like for the Qs, that's really healthy.
It is a trade-off. It's a trade-off of that profit. And you could run it with a profit. Obviously, we encourage that. This doesn't, but it is kind of your 30 cents. I think slippage is excessive.
Yeah, it should be like when I traded 1DT on SPX, and I did it on 1 minute. It was pretty straightforward to dial in the slippage because OO's using the NBBO, so it's gonna be the mid price. You just have to account for that slippage, how much that's going to impact you. So I feel like 30 cents is fair. The second big point that I make is I've just been playing with this. And so what's interesting is I do think this might need some antibiotics from the chat because the bigger issue to me, that's a great discussion that we just had. The bigger issue to me with this particular backtest is the magic minute. If you start moving it around, what's super interesting, and I need to spend more time with it, your win percentage doesn't change that much. Like I'm looking at one that's a couple minutes off. It's less than 10 minutes away. The win percentage is 70.2, but the capture rate is 4.7. So the capture rate is down by half. It's down by half. And the win percentage is unchanged. So I need to spend more time with it. And I played around with a couple other times and found the same thing. If you move it to 235, I mean, your capture rate's still 70%, but your win rate's still 70+% for your win percentage, but your capture rate is sub 4%. So there's something interesting with the minutes. And I have just tried to avoid things that have magic minute problems, and it has simplified my life.
Yeah.
So the concept is super interesting though.
Can I ask a question?
Please.
One question.
Please.
So on the required 2 prices, that's going in, going out, right?
Required 2 hits at profit target.
On opening and closing the trade, right?
No, that's on the profit target when you're closing the trade. Great question for anybody asking about that. It is a measure of liquidity. Essentially, what we're doing is to make sure that 2 minutes in a row, the profit target was hit. After everything was,
there's got to be 2 minutes between the first one.
You're getting out at the first minute. It's a back testing only, right? This is for back testing. Obviously, you would not. There's no option for an automation. So for back testing, to make sure that the prices hit 2 minutes in a row, and then it gets you out at the first one. So this is, it's I use it on just about every profit target trade I do. I think the only trade that I might not use it on is a power hour trade with very close to the money stuff, which is very liquid. But I use it pretty much extensively, and it's really helpful with longer DT stuff, with butterflies, with any sort of time spreads, single calendars, double calendars, single and double diagonals, etc. Because what's what's happening is we're just using the market data, and if you sit and watch, if you have a 30-day butterfly on, I mean, these things go like this, and you're not going to get filled even if it's above the fill sometimes if it's a spurious price. So the 2 hits at profit target cuts down on the spurious illiquid price moments.
Well, it's huge because I mean, I can't overstate that, because it just, you'll be getting out of a butterfly, and I say, let's watch the mid price for 45 seconds.
Yes.
And you might
range
$2 to $3 range in the thing. So, and so I'll say, okay, if it's a credit transaction, I want to try to work to the upper end, start a debit transaction lower end. But I'll tell you what, you can really give away. I mean, a lot of times SPX will protect you and you'll get a better fill, but you can get some really, really bad fills if you're not careful. I mean,
yeah,
right.
I would say, so a couple closing things, 2 comments from the chat. Steven, if you set the early exit to 935, you can see what the gap risk is likely to be. It actually is still a bit positive, expected, and the max loser is unchanged. Damien says, I trade something similar to this, and the slippage is very relative to what the price is doing at 330. Tom, that's a great point. Special KME does do stuff similar to this, and I think he's doing SPX, but we have a course on OO Academy, Special KME did, that's well, Matt, can you describe kind of his style of trading?
Yeah, there's just a lot of 1DT stuff in it, and it's exhaustive in terms of the amount of research he has done. It is truly a course that is a course. It is super educational and helps you get the tools to craft a strategy. If you want to really learn how to craft a strategy, there's 2 courses, and that's what they are. And they're very popular. They're 2 of our most popular courses. And there's, like I said, it's hours and hours of research into times, delta, risk management, setting up complementary strategies, especially more in the advanced class. So yeah.
And bottom line is, if you want to narrow it down 0 day versus 1 day, you're just giving, for me, being more of a wimp with some of the shorter term, I can get less gamma, right?
Yeah.
I can get something a little more forgiving on a 1 day. And that's really the key, is something that moves a little bit slower for you. As Troy was talking about Andy Griffith, yes, something just a little bit
time. A simpler time.
Yeah, if you were an option trader if you were an option trader back in Andy Griffith, I don't know if he'd go 0 day. He might go 1 day or 2 day, just get a little less gamma, a little less problems.
As the White Stripes have a song, so all I want is my ice cream colder and a little cream soda.
That's it.
That's all I want. It's and so I tell you what, that gives me the idea though, is we need to get Special K on, a friend of the show and a very smart man who has done research. So we got Mark to help us with some 0 day stuff. Might need to call in the specialist, Mr. Special KME, to get some 1DTE small account help in this. So, but listen, we'll continue on this idea of trying not to get pattern day traded. It's an interesting thing, because you're right. A lot of the allure of 0 day, it's like, hey, you don't overnight risk. You don't have any of this stuff. But 0 day is really tough for a small account. It's really, really tough to, because you basically have to ride or die. You basically have to set it and forget it. And, it's tough to do that. especially for a new trader who, to Dan's point, it actually removes some of the options you have. Because let's say, for instance, 0 day, every day you jump out of this plane, you have a parachute, and the parachute is you're going to land. It's a ride or die. So you land on the ground or you die. Those are your two options. Well, suddenly, if you have a small account and you are up 10%, it looks like you could have a safe landing pretty easily, up 20%, up 30%. Well, a lot of times you're going to click that button. You're going to undo the parachute. You're going to let the parachute go. But here's the problem. You only get 3 parachutes a week.
Yeah.
You only get them a week. And that's the problem with it.
Troy, can I say one last thing?
Please.
The one thing that pops in my mind, if I'm doing a 0 day trade, Iron Condor, and you say, Dan, would you do a 10 delta? Sure. Sure. You want to do a 7 delta, 12 delta. If you said to me, Dan, you're going to do a 1 day, would you do a 10 delta? I would not. I mean, unless it really tipped. I would want, because you're taking that overnight risk, give me a 30 delta, 40 delta. Because if, you open up or you gap a big amount, when you're doing the higher delta, like this example, you have a much better risk reward. Agree? Whereas if I take in a 9 or 10 delta overnight, you could knock out, quite a few trades if you have a huge problem in the morning. So to me, going overnight, doing a 1 day, I want a really good risk reward type like this. I think this is a pretty good risk reward.
Denny found one of my little secrets to make tests bad in this. He says the test without minimum premium doesn't change anything. Interesting. So
good for low vol environment, right?
Maybe you guys should play around with that. Maybe I saw something, maybe I didn't see something. But you guys can make it your own for sure. So anyway.
Are you saying that that's an Easter egg, Troy?
I'm not big into the game community. But I think that's what the kids call an Easter egg.
Clue? Would you call it an Indiana Jones style Temple of Doom clue?
Love Temple of Doom clue. I would say that it's it's like
our chat is so smart, Denny. You picked up on he found it right away.
Shout out, Denny. Shout out. So, but listen, shout out to us because we're going to continue tomorrow. Dan is going to the home country this week.
The home country. That's right.
If going to Chicago, Dan, could you do a live stream from a Chicago staple one day?
Yeah, I'd have to get one like Portillo's or something. Do it from the at lunchtime at Portillo's hot dog.
Or bring the Portillo's back to the house and just eat it during the.
Listen, we could do a simultaneous Portillo's, Dan. Someday I'll go get Portillo's. We have one 5 minutes from a house.
See, that would be dangerous to me. 5 minutes from.
I know.
Can we go to real quick, Troy? Let me quiz Matt. Matt,
please.
If I go in and say.
Yes.
To Portillo's, if I say, give me a combo wet, what does that mean?
Well, I only ever get one thing, but my combo is a combo in a bowl. So I'm just going to take a guess.
Oh, in a bowl? Okay.
So I get the bowl combo, which is sausage and Italian beef.
Oh, yeah, absolutely.
With sauce.
Oh, yeah.
And that's the combo in a bowl. So I'm guessing a combo wet is that Italian beef and sausage?
Yeah, see, it's to me, I admire Matt that he's trying to give up the bread, but to me, it's like anti-American. It's giving up the Vienna bread. That French bread is the French bread because it's bigger.
It's a big part of the contrast of how
I get the Italian beef, the Italian sausage, hot and sweet peppers.
I get both peppers too. The peppers are like, it's like when you add all this together, it's like, wait, this is $15, like $2 for peppers.
It is.
I want the gabagool.
What's that?
That's apparently a Sopranos reference. Apparently they don't.
I heard the bell.
Yeah, we heard the bell. All right, guys, listen. Have a great day. We'll plan on seeing you guys tomorrow.